Lastly here, the Federal Reserve is likely to increase interest rates by 25 basis points as it looks to wrangle red-hot inflation. Let's get right to Yahoo Finance's Brian Cheung for a rapid-fire preview. Brian, big day for you, too.
Yeah, absolutely. Obviously, all eyes are on that 2 p.m. announcement from the Federal Reserve regarding what it's going to do with interest rates. And folks, the expectation seems to be that it's going to be 25 basis points. Now, I've got three big things that I'm watching for in that meeting. Call it your Federal Open Market Committee. Three things to watch for. And the first thing I'm watching for is, of course, what is the impact of the war in Ukraine and the shutdowns in China, obviously trying to hike into what could be very uncertain geopolitical waters is definitely going to be an issue. That's something that we'll be watching for. My number two question is really about the balance sheet. Keep in mind that the Fed has been adding assets to its balance sheet. It only just stopped that process this month. The Fed now in the process of maybe trying to allow its $9 trillion in holdings to begin to shrink. That's going to be something that the Fed is going to have to launch at some point later this year. That's not going to happen in this meeting. Could they tee something up for the next meeting in May or maybe in June? We'll have to see in that afternoon press conference later on at 2:30 p.m. But of course, the number one question over here, when does inflation slow? So 25 basis points or 0.25% of an interest rate hike likely isn't going to be enough to quell the high inflation that we're seeing, which again is at a pace we haven't seen in 40 years. The Fed's going to have to raise interest rates more throughout the rest of this year. How many interest rates will that be? We'll have to take a look at those dot plot projections, which show each policymaker's projections for where interest rates could go over the next few years to read the tea leaves on that. And of course, again, statement's going to come out at 2 p.m., press conference with Jay Powell at 2:30 p.m., and we'll have all the coverage right here on Yahoo Finance.
Yeah, and Brian, I know that you're going to be asking a pointed question, hopefully of the chair. I'm just wondering, and don't give away the secret sauce here, but in general, what are you thinking about? What do you want to ask the chair?
Yeah, I mean, I've got a booklet full of questions here, but of course, I think the big question is going to be, how does the Federal Reserve respond later this year? There's no question with regards to what they're going to do today, a very rare situation where there really is no debate over what they're going to do. It's going to be 25 basis points. But again, the Fed estimates from themselves is that anything below a 2% or 2.5% rather, short-term interest rate is still going to be stimulative to an economy. So if they want to be restrictive and tamp down on inflation, they're going to have to raise interest rates by perhaps another 200 basis points. So the Federal Reserve, at the cadence that they're doing that now, that likely isn't going to get to that point by the end of this year. Maybe they get to that point by 2023. The dot plot projections, which we'll get at 2 p.m. today, will show us exactly what the Fed thinks about that.
All right, well, tell Jerome Powell hi from the Yahoo Finance Morning Show. Brian Cheung, thanks so much.